Toronto's real estate market is shifting fast, and not in the direction sellers were hoping for. With sales plunging over 23% and inventory levels swelling, March 2025 marked a critical moment where buyer hesitation turned into market-wide inertia. If you're new here, my name is Harkirat Singh, broker with Harmony Real Estate Group. I help buyers and sellers move smoothly and seamlessly across the GTA. Each month, I break down the latest stats and market report about Toronto real estate and the GTA. The purpose behind these videos is to provide educational and insightful content so that you as a consumer can make better informed decisions when navigating the Toronto real estate market. If you get any value out of this type of content, make sure to like and hit the subscribe button. If you have any questions or would like to work with our team, you can book a call by clicking on the first link in the description below. The March year-over-year real estate summary reveals a clear shift in market dynamics compared to 2024. Sales dropped significantly by 23.1%, falling from 6,519 sales to 5,011 sales, indicating weakened buyer demand, potentially due to high interest rates or affordability challenges. At the same time, new listings surged by 28.6% and active listings nearly doubled with an 88.8% increase, suggesting a buildup in inventory as more sellers entered the market and properties took longer to sell. This growing supply combined with reduced demand led to a 2.5% decline in average home prices, down to $1,093,000 from $1,120,000. Properties also spent more time on the market, with average listing days rising 20% and property days up 24.1%, confirming a slower paced environment. Overall, these indicators point to a cooling market that favors buyers with increased choice, more negotiation power, and pressure on sellers to adjust pricing strategies. In March of 2025, home sales dropped across all major property types, with detached homes down 24.9%, semi-detached down 15.9%, townhomes down 23%, and condos down 23.5% year over year. Prices also declined modestly, with overall averages falling 1.8% for detached homes, 0.9% for semis, 3.5% for townhomes, and 2.6% for condos. The decline was more pronounced in the 905 region, while Toronto saw smaller drops or slight price gains in some segments. Overall, the market shows weaker demand and increased caution from buyers. Looking at this graph here with data provided by the Habistat, we can see that 2025 has had the slowest start to the year for sales in a while when looking back 10 years. Sales are down nearly 65% from the peak of March 2021. March has also started the year with the most active listings in Toronto by a large margin. The only year that is similar trend-wise in active listings is 2015. Now we'll dive deeper into the freehold and condo market in the GTA and how this year compared to past trends. We'll also look at municipalities across the GTA. Starting with the sales of detached homes in the month of March, the first thing that stands out is that detached home sales in the GTA are their lowest level on record for the month of March going back to the year 2000. With March of 2024 a close second to current sale records. We only saw 2,155 sales, down 4% over last year, indicating a slow market for detached homes. A lot of buyers are on the sidelines given the current economic conditions and uncertainty with rising unemployment. Looking at the volume of new listings, they're up slightly to last year and seem on par with a regular healthy market. But active listings is close to double compared to what was available in the market last year. Looking at this chart, the number of detached homes available for sale across the GTA is nearly double of what was available last year. We are currently sitting at 9,200 listings compared to 5,600 listings available last year. Compared to historical trends, it is in line with years like 2010, post-GFC, and similar to levels in 2018 and 2019. Overall, listings are well available in the market for detached homes. This has driven up months of inventory. We are currently sitting at 4.63 months of inventory, which is indicative of a buyer's market. We've slowly been working our way towards a buyer's market since February of 2024 in terms of months of inventory, with dips in the winter of 2024 due to seasonality. Lastly, the median price for detached homes across the GTA has been pretty flat, despite seasonal changes in the spring markets of 2023 and 2024. It's a very slow market out there, with certain pockets performing better than others. Moving on to the condo segment of the GTA, sales are down 22% over last year, similar to levels seen during the global financial crisis. Overall, sales are at all-time lows for condos, beside the drop we saw during March of 2020 due to COVID-19. New listings, on the other hand, are at all-time highs for the month of March, looking as far as back as 2010, up 26% from last year. Active listings are at unprecedented all-time highs for condos. Condo inventory has not been available like this for years. Out of the 8,600 condos for sale, 31% are owner-occupied, 28% are tenanted, and 41% are vacant. Sales are a lot lower, inventory is gradually building up, bringing us to our next point, which is months of inventory. Looking at months of inventory, we're at about 6.26 months of inventory, a little lower than the peak in September of 2024, which was 6.27 months of inventory, putting us well into a buyer's market. Prices are still very flat. They're up about 11% from COVID lows and down 28% from the peak of 2022. 1,404 condos sold in the month of March across the GTA, out of which 78% sold under the listing price. If things get worse, we may see prices drop further, but prices are relatively stable for now. Looking at the home sales trend for the last 25 years, you can see the average monthly sales as the black line, the median monthly sales as the orange line, and the 2025 sales as the light blue line. Both average and median sales converge throughout the months. Typically, sales are at all-time highs in May and then taper off throughout the year, with a slight increase in October. We're off to a very slow start this year, with sales hovering around the 5,000 mark for March, while typically they're around the 8,000 to 8,500 mark, indicating that we may not have a spring market this year. New listings are in line with seasonal trends. We have had more listings in January than expected at about 12,500 listings, 25% higher than the seasonal norm. March is about 20% higher in terms of new listings hitting the market compared to the seasonal norm. This is the trend line that matters the most. Active listings across the GTA are sitting at 23,500 listings, 42% higher than the seasonal norm. Looking at this bar chart of active inventory levels in the GTA, going back to the year 2000, we can see that active inventory has reached all-time highs not witnessed since the GFC. This is an 89% jump in inventory levels since last year. There's a lot of condo inventory that makes up this number, almost 53%. When split between freehold and condo sales across the GTA, we can see both segments steadily declining year over year since 2021. Going back to the year 2000, sales have not been this soft and slow in the last 25 years, indicating a deep correction. The next trend we want to observe is home sales as a percentage of new listings. The lower this number goes, the closer we are to a buyer's market. The higher this number is, the closer we are to a seller's market. A balanced market is typically in between 40 to 60%. Looking at the trend line, we can say that typically at this time of the year, we are in the territory of a balanced market, right on the edge of being a seller's market. But based on the stats for 2025, we are well into a buyer's market with the trend line further declining. Breaking down stats based on region and municipality, we'll be looking at the change of active listings and home sales year over year across the GTA. By looking at the change in active listings, we can see that Toronto had the lowest change in active listings, sitting at 51%, followed by Durham at 60%, York at 62%, Halton at 68%, and lastly Peel having the largest change in active listings year over year at 69%. Looking at the change in home sales year over year by percentage, we can see that Halton had the largest slowdown, with sales dropping 37% year over year, followed by York at 32%, Peel at 29%, Durham at 21%, and lastly Toronto at 18%. Compared to other segments, Toronto has had a relatively stable and well-performing market. Looking at the terminations versus reported sales across the month of March, we can see that the number of listings terminated this March compared to last March is up 75%. Reported sales are down 26% year over year. Lastly, looking at terminations versus expiries year over year in the month of March, we can see that across the GTA, both terminations and expiries for listings has increased across the board. There have been 69% more listings expired this March and 71% more terminations, indicating that out of 23,000 listings, absorption is a lot more lower. All the stats reported can be found on TRREB's Market Watch or the Habistat. March 2025 marked a pivotal moment in Toronto's real estate market, highlighting a strong shift towards a buyer's market. Sales fell over 23% year over year, reaching their lowest March levels in over 2 decades, while active listings surged by nearly 89%. Flooding the market with inventory. Detached home sales dropped to record lows and condo sales plummeted 22%, resembling conditions seen during the 2008 financial crisis. Months of inventory climbed to 4.63 months for detached homes and 6.26 months for condos, firmly placing both segments in buyer's territory. Prices remained mostly flat with some slight declines, but 78% condos sold below asking, suggesting weak buyer confidence. Regionally, Peel and Halton saw the largest jumps in inventory and sharpest declines in sales, while Toronto remained relatively stable. Terminations and expiries also rose significantly by over 70%, indicating sellers are struggling to close deals. Overall, the market is showing signs of a deep correction with high supply, weak demand, and no clear signs of a spring recovery. If you found this video useful, make sure to like and hit the subscribe button. I plan on breaking down these stats monthly if this type of content interests you and you would like to know more about what is going on with Toronto and GTA real estate. If you have any questions about the market, feel free to book a call with me by clicking on the first link in the description below. Thank you for watching, and I'll see you on the next one.